Hey Vinod, this is Ryan with TrendLizard.com. Thanks for signing up on our website, and thank you for sending the email with the 3 tickers you'd like me to analyze. These are stocks, India stocks that you've asked me to look at. It's Reliance Industries, the Nifty 50, and then I think it's a CC Bank, not positive on that pronunciation. But either way, we're going to take a look at all 3 of them. We're starting with Reliance here. It was incepted back in 2002. The overall pattern, Elliott wave pattern, isn't 100% clear on this guy. What is clear to me is that there are only 2 types of price movement that we see across this chart dating back to 2002 when it was incepted, and that is that we're getting 5-wave advances followed by 3-wave pullbacks. You can see a 5-wave advance from its inception, a fairly deep retracement, but still a 3-wave pullback into the 2005 low, another 5-wave advance here to a truncated 5th wave high in 2008, followed by a large sideways pattern. Looks like a triangle pattern to me. That's a little bit more of a complex counter trend pattern that we'll see from time to time, but that's what it looks like. It contracted. It was clearly a counter trend move, and there was nothing trendy inside this contracting triangle pattern here, so that's why we're calling it a triangle. Then off the 2015 low, it found its wheels again and gave us a very nice 5-wave advance into the late 2019 high. At which point it was crushed. Like so many things were in 2020, this guy took a very quick dip, pulled back. It actually retraced about 61.8% of this up leg off the 2015 low. And once it found that low, it just turned and skied higher from there. So that's where we're at today. The question is, what's coming next? We want to find out if this guy is going to continue higher into the foreseeable future and if it's a trading opportunity or not. So let's go ahead and zoom in and look a little bit closer first at this advance off of the 2015 high. This is it. I took a really close look at this because I wanted to confirm that this was the end of a 5-wave move and that this wasn't like a 4th wave pullback here. And I counted it out, and it looks very clean, and it looks like a 5-wave move that completed in late 2019. And the other reason I believe that this up leg ended and was corrected is because this pullback was so sharp and so deep, it actually retraced about 61.8% of this up leg, which is a good sign that it was a larger degree pullback, not just a 4th wave within the advance off of the 2015 low. So again, it appears as if a 5-wave advance completed, it was corrected, and now a brand new up leg has begun and has a lot more strength to go. So now we're going to just go ahead and zoom in on the 2020 action to see if we can figure out where we are in this up leg. Since we know the trend is up, we know that this must become a 5-wave move because all trendy moves play out in 5 waves. Elliott wave 101. So let's go ahead and zoom in here. Here is a look at the advance off the 2020 low, and it looks like an incomplete 5-wave move. So this is a bullish thing. We expect it to be a 5-wave move. We know that trends play out in 5-wave moves, and the trend is clearly up here. So all those signs point to higher prices. And again, it counts out very well. It appears as if we completed a 1st wave in May, had a 2nd wave pullback till late May, and are currently in a 3rd wave advance. Now, that's the good news. The bad news is when you have a move that's this direct, one that moves from below 900 up to about 2200, it's going to be hard to find a stop level that is super tight. It's just not going to be an option. You need larger pullbacks within a wave pattern for there to be the creation of an opportunity for you to use a closer stop level. That said, this guy needs to stay above 1700 at all times to remain bullish. If there was any notable weakness that emerged that stayed above 1700, you would have to raise your eyebrow, but I don't think you're going to see it. I think you're going to see this guy continue higher, giving you small pullbacks until you get the formation of a larger 5-wave advance. Again, unfortunately, the closest stop level that's available with such a straight line move is at 1700. So as long as it's trading above this level, remain bullish, expect higher prices from Reliance. So next ticker you sent me was the Nifty 50. I've actually looked at this guy recently for my YouTube channel. I'm going to take another look at it for you now. It gives me a good opportunity to update this guy. It was incepted back in 2015, had a pullback into the 2016 low, at which point it found a low, turned higher, gave us a very nice 5-wave advance into the 2019 high. From there, it had a pullback, actually set a marginal new high before tanking and falling off in 2020. Despite the new high, we're confident that the 5th wave high occurred in 2019 and that we got ourselves a nice 3-wave pullback into that 2020 low. Since then, there's been a very strong recovery, like so many things have recovered, and the Nifty 50 has moved above a 61.8% retracement of the huge decline in 2020. That's important because it confirms the counter-trend nature of the pullback. And that's a big thing. When you have a move this sharp, there's got to be a concern that it's a new trend. It is not. It is a counter-trend move. We know that by the three-wave nature of that move, as well as the fact that it was retraced by more than 61.8%. So let's go ahead and zoom in and look at this action off the 2020 low to learn a little bit more. This is it. The low was recorded on March 23rd, like it was just about everywhere across the market. It was a leading diagonal to the upside that ended in late April. There was a three-wave pullback into May's low, at which point it began a third-wave advance that it is still in today. It's been a pretty straight-line move. It's been pretty strong, but it continues, and it should be expected to continue from here. What you might get shortly, once this up leg finishes, is a little bit larger pullback to give us the fourth wave to counteract the second wave here. So you have your first, second, third, then you're going to get a fourth wave down, and then a fifth wave up to complete a five-wave advance. Overall, I think it's going to continue higher for a lot longer than that, but once you do get that completed five-wave advance off of March's low, you will get a larger pullback as that move is corrected. Overall, Nifty needs to stay above 9,900 to remain bullish. Everything suggests to us that it will, and that you need to be bullish on this guy. And for the sake of being a subscriber at TrendLizard.com, we follow EPI, the India ETF, which is most widely traded. Looks very similar to this guy. It's actually one that we own in our portfolio, so we obviously follow it pretty closely. It has a very similar pattern to this guy. Looks bullish, looks like a good buying opportunity. It's one we own, so certainly it's one that you can own as long as it's trading above 9,900. A move above 9,900 changes the whole deal. It would make this a counter-trend recovery off of March's low. We don't believe that to be the case, so remain bullish as long as it's above 9,900. So I've got one more to look at for you. Again, I'm not positive of the pronunciation. Maybe it's ICICI, I don't know, or a CC Bank. Whatever the case may be, this is the chart. It was incepted back in 2005, had a little up and down move, and then it embarked on a very large advance off the 2009 low. So you think with that being the case and it being in a clear uptrend over the course of that time, you would think I might be more bullish on it, but I got to admit I'm not in love with this stock, and I think it's the worst of the three tickers you sent me, and I'll show you why. While the general gist of it is a large five-wave advance into the 2020 high, the first thing I saw when I looked at this stock, every single up leg did not look like a five-wave move. It actually looked like a three-wave move. You can see here, a three-wave move here, and a three-wave move here. These weren't clear, trendy moves. So to me, I wonder, is this a very clear representation of social mood or not? Maybe we can't really trust the Elliott wave pattern on this guy as much as we can on other places. That said, I messed around with it a little bit. What I did, this is a log scale which shows every box is a similar percentage move. I instead changed it to make it a similar point move to better reflect what happened off the 2009 low. And I think the pattern becomes a little more clear. It's a little easier to make these look like five-wave advances. Still, I just don't trust it as much. That first up leg off the 2009 low still looks a little less clear. Nevertheless, I think one of the benefits of looking at this linear scale is it makes it very clear that the pullback in 2020 was absolutely a major correction. If we were looking at it in the log scale, it doesn't look as big. It's hard to be that impressed by this move or even confident that this up leg completed. But when we get to the linear scale, we see that very much so. There's no doubt that it has completed and that a larger pullback has begun. And you can see that it's actually corrected more than 50% of this entire up leg off the 2009 low. So there's that. On a long-term time frame, somewhat bullish. It has a general five-wave move to the upside. But what's happened since then looks a lot less bullish, and I will show you why. Let's go ahead and zoom in on what's happened in 2020. This is it. That down leg looks trendy to me. And more than that, the recovery off of March's low has just been weak and lifeless and not impressive. I mean, you could throw a dart at the financial section of the newspaper and find a stock that's killing it since March 23rd. And this guy's not one of them. I mean, sure, I guess it had a pretty decent gain if you look from the ultimate low to the ultimate high of this recovery. Nobody's participating in that move. I mean, it's you wouldn't have nailed those moves anyway, but more than anything, if you draw a straight line across them, you're going to hit that straight line about 15 times just because it's been chopping sideways. And more than that, there's just no trendy movement in this entire chop fest that's been going on since March's low. Bottom line, this looks like a counter trend recovery. It's probably not over. You're probably going to get a C wave up that could go as high as 440, so maybe that's a trading opportunity if you want to see that kind of move. But this is not the type of stuff that I trade. I look to trade in trendy moves because they're more predictable from an Elliott wave standpoint. Counter trend moves, who knows what they're going to do. You can get double, triple corrections, you can get triangles, you can get sharp zigzags, you can get choppy flats. There's a whole bunch of different counter trend Elliott wave patterns out there. We just don't know which one we're going to get when we're in a counter trend move, and that includes this move here on ICICI. So I wouldn't own it. I mean, if you get a move back down towards the March's low and it reverses up and you want to trade a C wave up, you can do it, but there's better opportunities out there. And I'm assuming this is a bank, and so I'm not terribly surprised to see this because a lot of what we see from the stocks that I look at every day, and also the ETF we trade, XLF, which is the financials ETF, most widely traded financials ETF, it looks similar. It's not impressive. So something with banks and financials just ain't clicking right now. So I'd stay away from it. So anyway, those are your three tickers. I hope that's helpful for you. Please let me know. You can email me at ryan@trendlizard.com if you have any questions about any of this stuff. Have a great week, and I'll talk to you again very soon. Take care.